Greetings, folks, and Happy New Year. Hope all is well. As I mentioned previously when I posted a recording that my first post for the new year would look at lithium price forecast. We all put a lot of emphasis on this. I know there are colleagues and commentators and other services that track or look at the lithium spot price on a daily basis, looking for that magic turn, looking for that upward trend. Have we found the bottom? Have we found the bounce, etc. Anyway, what I thought I'd do is go through numerous forecasts that have been made with their sources. Just walk through it and discuss it about so you can also have your view, digest it, and together, we can start to have an informed look at the market. Key thing is that the overall fundamentals. I mean, we've discussed previously about the cost curve. We discussed previously about rising demand for both electric vehicles and battery energy storage. So those kind of macro fundamentals are intact. Yes, there is some geographical variation, definitely. Each one has its story. North America has its story. LATAM has its story. Europe has its own story. Asia has its own story. So, there's going to be variation. And I think what we do, we look at the overall picture. And admittedly, sometimes one can lose the detail. But let's see how we do. And I think there are stepping stones to take in getting to a more refined view of where things may pad out. And then I'll give my kind of, I'm a big picture guy. I'll give my sort of take, and hopefully maybe even in the future collaborate or work with some statisticians to posit something different to what I'm going to show today. Okay, so I'm going to be reading a little bit, so my eyes are going to go sort of up, down. I'll try not to do that too much, but just flicking this chart up from the International Energy Agency, just to show again that although I don't keep referring to this term about net zero, but anyway, they refer to it as a net zero scenario. In other words, let's just call it a very accelerated high case of adoption of electric vehicles, energy storage in general, I would say, and what the potential gaps are. So that's just reinforcing what I said earlier. Now, if we start with this first source that I have picked up from a piece by Carbon Credits, referencing Techopedia, and also referencing the Australian Government Office of the Chief Economist. I'll put this up here. There are some projections made. There's some sort of general reasoning given, as you can see, and there's a range. What could happen, what could not happen, maybe. And what you get is something which I think is a theme through some of the forecasts, that even though there may be a limited spike in 25 or 26, that it will be short-lived, possibly. Anyway, this is the first one. You can look these up on the net, on Google or whatever, and on X as well, and see for yourself. Let's get the next one. So next one is Morningstar, putting up this chart as well. And as I said earlier, they also look at this potential spike, but it's not a spike. I don't know if we can even call it a spike, but it's not a spike as high as they initially forecast. They've said that they've actually reduced it by 30% to $15,000 a metric ton. And then we'll get something sort of stable around that sort of price, or a bit higher actually, perhaps. The marginal cost viewed at $20,000 per ton. I think that's also a common theme among the forecasters, and it sort of shows on the production cost curve, which I flashed up in my last talk. And I think that's quite sound, that estimate, and hence, um, well, why not apply economics and say, okay, it's marginal cost pricing. Okay, so that's Morningstar. The next one we will go to is S&P Global. Um, Now, they give, in the piece that I found, they give a bit more detail in terms of how they're determining their forecast. Um, we've got an estimated excess supply at the moment, maybe of 90,000 metric tons. This, by them, is forecast to reduce to around to the 30,000 during 2025, which is a level that is neither here nor there. I mean, it could be in transit, it could be in stocking. So, in other words, their view is, or their thesis is, that things will balance out in 2025, and hence they've said 2025 will be more of a year of balancing, and yeah, then they don't expect a significant ramp up in pricing. So um, let's see 2025. Well, I'll put this up, but that's the story. They focus more on 25, and yes, this is a year of recovery. So that's from them. Now, here's the slightly more contentious one, in my view, Goldman Sachs. I would say Goldman Sachs have the most bearish view of where the prices are going to be. And set by set, I'll put up these prices on screen. They've got some prices for lithium carbonate. They've got then prices for lithium hydroxide. And then they've got some forecast prices for spodumene. But in general, they don't actually see that much of a recovery happening, as you can see by the prices. Now, if the marginal cost is around $20,000, if that is the case, how could these prices be maintained unless, we would need to go into the underlying assumptions, unless they are assuming that all marginal production is going to be like super low cost brines or something. From the data that I've seen in terms of the rate at which different plants are likely to come on stream, I'm not sure that's the case. So, but again, somebody might have more knowledge of the underlying principles and fundamentals going into the Goldman Sachs forecasts. Please comment, please reply, and give your view. But yeah, this is one of the more bearish. And then after that, we move on to forecast by Adamus, intelligence. And yeah, I think again, it's a similar story, that they see 2025 as a year of adjustment. They see $15,000 to $20,000 as being minimum to entice and encourage new additional supply, and keeping in mind that, okay, if you have additional existing operations in C&M, and you start to get those prices and you want to sort of bring those online, yes, there are startup costs and whatever, but technically you could bring those online. However, if that's the sort of forward price signal you're giving to investors, explorers, and developers, then I'm afraid that in the latter years, decade, you might be unpleasantly surprised, or we might be unpleasantly surprised, in that that production is not brought online as fast enough, simply because the prevailing deals that are out there, whether they are negotiated contracts or spot-linked contracts, they're just not high enough to encourage that supply. And if the projections, what's the figure that's normally touted, around 3 million tons annually by 2030, if that's where we're going, we're going to need a significant number of new mines, and they can't all be from one low-cost area. I don't think so. So um, that's where we are there. And then finally, um, Joe Lowry, he has given a view this year that he expected 2024 to be a year of recovery. Of course, we've seen what's happened, so that view has shifted to 2025, which I think is natural, and there's nothing wrong with that because it's very difficult to gauge, the key dynamics. But the expectation of things being delayed, going to CNM, absolutely, he's been right. That's all started. So we sort of have got the beginning of the rebalancing for 2025. By the way, all of this information is gathered in a X account, and I will put that X account and post up so you can go to it yourselves. Now, that is that's a summary of a few different forecasts that I've been into. Now, in general, what do we get from that? I think the common theme is, yes, we are at that stage in the mining clock where we start to see acquisitions, we start to see shut-ins, we start to see delays. That's happening like clockwork, and which is good for the stability of the market and good for potential signals for the future. But from all of these forecasters, it's very clear that we have an air of caution, especially for 2025, and that's the other common theme, that 2025 is the year of rebalancing. Now, if it's the year of rebalancing, at least one of the earlier ones I read out, we're talking then a potential recovery in price of 15,000, maybe towards the middle of the year, and then thereafter, if things start to get tight, we start to get that move up to the marginal cost. And I think that's the other common theme. Some of the other unknowns are efficiency factors. I mean, will we be able to bring more and more of the brine? Will we be able to deploy DLE at significant scale? My view is with all of these things, I think that in both directions, one thing that I have seen amongst the average person, amongst economists, amongst all experts, is that when we make forecasts, when we make expectations, there is a tendency, when we're pessimistic, it's to be overly pessimistic, and when we're optimistic, it's to be overly optimistic. So what I see at the moment is a collective caution. So in the same way there's potential for downturns here, I think we've got that risk of upturn and of demand being higher than expected. So in other words, I'm leaning more, I'm using principles of behavioral economics, and therefore and it's let's say trend based on positive economics, i.e. observed behavior, rather than some sort of normative statistical model. So based on those principles, I would say that the odds are that the collective are being overly cautious, and that towards, I would say, after the second half, I think the first half is going to be quite, it's a period of stabilization. Second half of 2025, I think we're going to see trend forming. So how does that bode for all battery metal stocks, actually? I mean, but focusing on lithium, my view is that those that are nearest to production are the ones that will be given the highest time value by investors. And I think as we start to get those moving closer and closer to production, and there's a more solid trend line developing in the price, and there's more clarity on the supply and demand balance, then that starts to reverberate and cascade further down the chain towards, pre-financial close resources, and then eventually explorers, and that's how the commodity cycle works. It's not advice. I haven't really even used a scientific method, although I may have quoted some behavioral uh, blah blah. But that's my best view at the moment. So, in terms of myself, long-term investor, as you know, I'm not great at trading short-term. I don't have the time, frankly. Um, but looking at it from the medium to longer term, I expect first half of 2025 consolidation and positive, and the second half of 2025 I expect to be already in a more positive kind of trend. Let me know what you think. I'm sure there are other forecasts out there, and as I said, I'd be keen to perhaps apply something more dynamic. So, bring in some S-curve estimates, convert that into LCE, and see what we get. But at the moment, I'm relying on quoting published figures from other entities. Have a great new year. Thanks for watching.